that is certainly easing the pressure in stocks today is crude oil, which is plunging to a 2-week low after surging to a 7-year high earlier this month. Let's bring in Amrita Sen, head of research at Energy Aspects. Amrita, did it just get too overcrowded with everyone betting on oil, or is there a fundamental shift going on here for the outlook?
No, there isn't any fundamental shift. And of course, it's been a 30% plus correction, and that is spooking the market. There are a couple of reasons. Obviously, the COVID cases rising in China and expected mobility restrictions is playing a big part. But if you ask me, the biggest reason is absolutely the lack of liquidity in the market right now. Risk management is really, obviously banks and other risk management teams are putting traders under a lot of pressure given the volatility. Margins have been increasing. If you look at Intercontinental Exchange, they've raised margins both for crude and for diesel. I mean, you're talking about a percentage increase, 90% of the front month for diesel futures in Europe. Of course, people will be forced to close out their positions when margins are being hiked to that extent. So this is genuinely just financial reasons rather than any physical market fundamentals changing.
A 7% decline right now takes WTI to 95. I mean, we were talking about $150 crude. Why doesn't the China story make sense in that context? Because they're the top energy consumer, the top energy exporter. If they're starting to see a slowdown, and already they've been hurt by the property sector, now the COVID lockdowns, doesn't that mean weaker demand?
China was already, I shouldn't say slowing down, but China was not firing on all cylinders for pretty much all of last year. They've had breakouts before as well. They had one earlier this year. They've had several last year as well. So this isn't new. China hadn't even abandoned its zero COVID policy. So sure, we've cut our Chinese demand numbers by about 170,000 barrels per day. But that's peanuts when you're talking about 2 to 3 million barrels per day of losses from Russia. I think that's the context you've got to see it in. And our sources in China are telling us, yes, there's going to be pretty steep declines in, say, gasoline, diesel demand 10%. But it's only for 2 weeks because the government's gotten a lot better at controlling these breakouts. But yes, look, we're not expecting China to be firing on all cylinders till middle of next year anyways.
So what happens next? What are your targets?
I think, look, crude's going to be very volatile. It is, again, because of all these risk management issues and the lack of ability of traders to warehouse risk. But ultimately, this summer, we absolutely see prices heading higher. We are going to test the 2008 highs. And, we don't think demand really starts to fall below $160. So if rationing is required, that's where prices have to go.
Amrita Sen, thank you for joining us.